So we're ready to start. So thank you guys for joining, and sorry for waiting, but we need some time to just get the zen and so we can ready to talk. So the webinar today is organized by us, by hellotax. I'm the partnership manager, Nick Penef, and we're doing that because hellotax has been working with e-commerce sellers for the beginning. Just some introduction for us. hellotax used to be an Amazon agency, so we had our own brands and we're selling that on Amazon and other marketplaces. And we have been looking for a solution to help e-commerce sellers to be VAT compliant. And unfortunately, we didn't find solution which is actually tailored for e-commerce businesses. So we've actually established and built the software to help e-commerce companies to grow and be VAT compliant across Europe. And the reason for having this webinar is actually to educate clients, partners, for how and what we can do with our partnership ecosystem to help the actual sellers to grow. So today we're having the webinar with our partners from Neet.com, which is a fintech company. I'll have Pedro in a minute to introduce himself. He's the speaker from Neet. And after that, we have Osome.com, which is a cloud accounting company from the UK. And then at the end, we'll have Nimble seller who is doing the funding for e-commerce sellers. And obviously at the end, you guys, after you're growing, everything is good. Now you're making sales, you're expanding, everything is good. There is an unpleasant part, which is paying taxes. Obviously, you cannot avoid that, especially right now after COVID. Tax authorities are just cracking hard on the marketplace and other providers, so you need to be compliant. But of course, we're actually going to explain you what you need to know, and we'll show what you need to use from what we can offer in order to do that. So thank you, Pedro. Thank you, Timur. Thank you, Carlos, and eventually Yefut and to say would finish it. So thank you for joining. So now I'm turning it over to Pedro, who can actually tell you more about Neet, what they do, and how they can help e-commerce sellers. So thank you, guys.
Sure. Thanks very much. So bear me just 1 second while I share my screen. Thanks. So my name is Pedro Pinto. I head up growth for Neet. I've been with the company for about 7 months. And really our focus is to help entrepreneurs based in Hong Kong. Neet is a financial services company. As I said, headquartered in Hong Kong, and we provide financial services from incorporation to account banking alternatives. So the problem that we really try to solve is that global trade has become very fragmented, and payment is one of the main problems and challenges for e-commerce businesses. We see that because supply chains are becoming global. Whether you run as an e-commerce manager, a drop shipping Shopify store, or you basically buy and sell your own kind of products, the procurement and the suppliers are very much kind of like split and fragmented. We're also seeing a huge increase in terms of the channels used to pay for goods, from Stripe to invoicing to checkout. Some channels are now even taking crypto. So again, how you manage that fragmentation of payments. And typically as well, international payments tend to be very slow. And when dealing with kind of e-commerce, which is a very kind of fast moving business, these can negatively impact our kind of customers' cash flow. So our solution is that we help businesses incorporate in Hong Kong. We feel that that is a great market for e-commerce. There's a lot of advantages in there. And we did that in partnership with Osome, who's here as well, by providing a seamless online-only application process. We also offer commercial Visa cards that help e-commerce businesses accelerate their setup, pay for their expenses online or in person as well. And alongside that, a global account that makes it easier to receive payments whether it's from your payment gateway that you need kind of to pull into a local account. And we offer that across multiple currencies. So our mission really is to enable the entrepreneur economy, giving you the tools that you need to be successful with your business. So going to a bit more of the solution, as I said, it's a kind of 15-minute online application. There's no upfront commitment, so no monthly fees, no minimum deposits, or follow-up fees for using our services. As part of incorporation is a one-off fee. Included in that, we offer corporate services for a whole year, alongside with a registered address and business registration certificate. So all of those are things that are mandatory for Hong Kong. With our cards solution, you will have the choice of Hong Kong dollar or US dollar card. And we offer a 1% cashback on all of your card spend. So this is from your marketing spend, advertising on Facebook, you will get 1% back on all of that. And we also protect you with corporate liability. So if the card is misused, you have the ability to claim back, and exclusive discounts. So a wide range of perks or rewards that you can redeem with our Visa card that can help you get set up on new services, from Sell to Google, Twitter, Facebook. So we feel this is a great tool to facilitate and help e-commerce businesses really scale up their operations. And lastly, we have our global accounts that enables you to kind of collect Hong Kong dollars and US dollars directly in Hong Kong. But we also offer the ability to collect GBP and euros for the customers that have kind of global e-commerce businesses. You can also exchange the currencies in US dollar and US within our platform, and then make local and international payments for up to 35 different countries for those of you who have global suppliers. In terms of our customers, as I said, we have a focus on e-commerce. We've seen that a lot of them are based in Asia, and we've seen there's a lot of growth. But we also have some customers from the UK and Europe. Again, the value here has been that, with things like Brexit happening, instability and uncertainty in kind of the European and which regions you can sell to, we've seen a growth in businesses incorporating in Hong Kong, being able to access the Chinese market, which is a huge potential, and really start growing in that region. Another area of focus tends to be more of the B2B import exporters that source goods in China and trade with Europe. And another area of growth is really our kind of service providers. So businesses that are providing either like remote marketing, accounting, basically any type of professional services into both Asia and Europe. So that's basically our services. If you'd like to know a bit more, check out our website, neetcommerce.com, and to follow up, we'll happy to send more information. Cool.
Well, okay, thank you, Pedro. So we have some questions, but we'll answer that at the end. So thanks for the introduction. And now we're handing it over to Timur from Osome. Timur, please introduce yourself. So, and share now your presentation.
Thank you, Nick, for that. Let me quickly share my screen. Bear with me a second. Right. Thank you, Pedro. That was really insightful. Thank you, everyone, for joining us. My name is Timur. I'm one of the senior accountants here at Osome UK. Osome is an online and a paperless platform that looks after companies' incorporation, accounting, and bookkeeping, and your taxes as well. Now, in this journey of discussing how to make online selling easier, we often don't pay too much attention to the basics, but a vital part of our business, and that is, maintaining our books. Now, in this presentation, we will cover three main areas. That starts with incorporating a company in UK, how that actually works. why bookkeeping is an important element, and different type of taxes for yourself plus the company once you have incorporated a company in UK and you go through on day-to-day activities. Now, where do we start when we're starting an e-commerce business? The first step in the UK is to incorporate a company. The incorporation is done on a company house. Now, company house in UK is where all of your data is maintained, and that data is available to the public. Once registered, you will need to start submitting your annual accounts to the company's house as well. So company's house is the main body where you register your company and submit your accounts on a regular basis. Now, what do you need to register in UK and start an incorporation? You start with basic details of a director, which are not public, things like place of birth, parents' name, national insurance number in UK, and your passport number. With that, you can set up a company as a director, and then follow up. You need a specific code called SIC code. Now, that code is given to you based on what kind of activity you're performing. So if you're an e-commerce business, it will be mainly things like online retailer, and that specific code is then used to declare taxes based on a similar way. Now, one company can have 4 different type of SIC codes. So, you can have an e-commerce business where you also involve some other activities, and you can do up to 4 different type of activities in any company. You also need to declare your share structure. So you tell the public and the company's house of what the ownership of the company looks like, who owns the company, and what part of the company is owned by which individual. Now, normally the incorporation is quite straightforward in UK. You can do it yourself, or you can get an accountant to do it for you. Upon a completion of receiving this incorporation certificate, the certificate acts as a legal company's legal existent proof. So you need that to do any sort of activity in the business, like opening a bank account, applying for a loan. You need this certificate, and you get that once you've incorporated with the information I just mentioned. One thing to be mindful of is that while you're registering, make sure you opt in for corporation tax registration as well, because when you incorporate a company, you need to start paying corporation tax on it as well. Again, just to reiterate, you need to submit your annual accounts to company's house and your corporation tax to HMRC. So there's 2 different things that you need to do once you have incorporated the company in UK. So now that we know that, to start an activity in the UK and start your e-commerce business, first thing is registering yourself. The second part is knowing why do you need to focus on bookkeeping, and why do you need to focus on, day-to-day basis and maintain your books. Now, normally, the bookkeeping is seen as an activity that helps you keep, paperwork filed and keep everything in tidy. And the maximum you would probably do is create a list on an Excel sheet with expenses on one side, income on one side. And most people think that that's more than enough, and which is true, that it is enough, but there's a lot more involved in it, and you can get a lot more out of it. For company's house, for example, and corporation tax purposes, you need to record every penny that you're spending or receiving in a specific category. Recording everything into expenses is not a good way of declaring your taxes. There are VAT implications for each transaction as well. You need to match your bank transactions to all the expenses and income to make sure that everything is recorded and you're declaring all of the income plus your expenses, and reduce your tax if you have more expenses than income. Now, bookkeeping wise, this is the compliance side of things. You need to maintain this because the compliance, as I mentioned, is necessary. But having a good bookkeeping and good books can also give you a vital information about your business at any given point in time. So things like, how much do you owe to your suppliers, or how much customers owe you? How much cash do you have available at the moment, or you will have in the next period? Imagine you have a really good deal from a supplier and you have the cash at the moment to pay that and get that deal. But that cash was actually payable to someone in the next 3 months. And now that you've used up all of that cash, you won't be able to pay those suppliers. This could result, in a distrust in the market, and you might end up taking a loan with a higher interest rate. So it's really vital to have your bookkeeping on day-to-day basis, so you exactly know how much cash you have in the bank account and how much of that you actually own or is payable to someone else. Budgeting is a very important aspect as well, and it helps you keep motivated. So let's say you decide today where you want to be in the next 6 months. Budgeting that and follow that through will help you control your business. you will know exactly where you are, and if you need to make any vital changes or any big changes now before it's too late. If you have investors involved, your investor would want to know how your business is doing at any given point in time. And this is mainly done through, a categorized, well-maintained book. And these are all the perks that you need to have to understand how your books are doing. Now that we understand, how to incorporate the company and how to maintain the bookkeeping and what, important element it includes, you then need to think about taxes. In UK, there are 4 main types of taxes that you need to worry about. The first one is payroll. If you yourself are on salary or you have someone you pay salary, depending on the frequency, you will have to do pay as you earn tax, which is on monthly basis. The second part is VAT registration businesses. So if you're a VAT registered business, you're collecting money on behalf of HMRC, which normally you pay back to HMRC on a quarterly basis. Once a year, you'll also have to pay corporation tax on the net profit, which is 19% at the moment. Now, lastly, whatever you earn out of all of this, so after paying your VAT, your PAYE, your corporation tax, you get a net figure, which is your net profit that you can take home. You need to declare taxes on those as well. So to help you understand what those personal taxes include, everyone in the UK who is a registered UK individual gets a £12,500 as a personal allowance. Now, this allowance says that any money that you've earned personally up until £12,500, you don't pay any tax on it. Anything above that, you pay 20% tax. But again, it does not stop here, because there's also national insurance contribution that you need to make. And the minimum threshold for national contribution is £9,500. This means that any income up until £9,500 in a year is tax-free. And from 9,500 to 12,500, you pay national insurance. And from 12,000 to the rest of the money, you pay 20% tax. Now, when you get involved into that, you need to look further down. So imagine yourself from £12,500, you're making up to £50,000. That bracket is taxed at 12%. Any income above the £50,000 falls under 40% tax bracket. Just remember though that this 40% will only be taxed on the additional income on above the 50,000 bracket. So anything below 50,000 will be taxed 20%. If you're earning 55,000, that only £5,000 of that will be at 40%. National insurance, there are 4 different types of national insurance. If you are running a company and you employ someone, imagine you're paying them £30,000 annual salary. You as a company will also be paying employer's national insurance, which is 13.8%. So your total cost for that employee would be 30 plus 13.8%. But if you are employed yourself in that company, you will also be paying, as I mentioned, 13.8%, 12% extra national insurance for anything above £9,500. As a limited company, you can also take out dividends. Now, this is where things get interesting, because dividends is taxed at 3.5%. So why would someone want to pay 20% tax on salary where they can just simply take dividends out and pay 7.5%? The problem is that salary is a tax deductible expense. So you can reduce your corporation tax by it, where dividend goes out of your net income. So although it's less tax, but you then end up paying more corporation tax. So it's always a good idea to have a mix of salary plus dividends. And with dividends, you also get £2,000 extra. So your total tax-free allowance becomes £14,500. There are other things like capital gains tax, which is any item that you're selling in your business, which is not a normal part of your activity. So initially when I said SIC codes, so if you're selling anything out of that 4 SIC codes, which is out of your activity zone, then that will come under capital gain, and you would have to pay capital gain tax on it, which has another allowance of £12,300 free, and anything rest you pay tax on that. Corporation tax is quite simple. It's 19% of your net income. So imagine all of the sales plus expenses minus the expenses. The balancing figure is your net figure. Now, remember, it becomes slightly complicated because companies house say that you need to submit accounts, and accounts work in a different way than tax calculation. So the net figure from accounting perspective would be different, but for tax purpose would be different. And a small example is depreciation. The company's house says depreciation isn't allowable expenses. You can reduce it to reduce your net profit, but HMRC does not allow that expense. So you really need to know which is an allowable expense, which not, and to get to your net figures, and then pay 19% tax on that. VAT is a big area. There's different VAT rates for different products you're selling. It starts from 0 rate, 5% to 20%, and depending on the product, if you're UK based and your selling is more than £85,000, then it becomes a mandatory registration, and you then need to start charging VATs to your customers. From people who are selling outside the UK, the rules are slightly different. One last thing I would like to cover on taxes is director loan account. So if you take out loan from your business and do not declare it through salary or dividends, it's called director loan account. And if you don't pay that within the time period of 9 months after your tax year, you end up paying 32.5% tax on it from the company. So the reason I'm telling you all of this is that there is a lot of tax and accounts implications involved in how you move the money around the company, and it can entail a lot of taxes and penalties if you don't do it correctly. Moving from that, then now that we understand how to incorporate a company, what bookkeeping means and why it is important, what are the tax that entails and involved in UK, we at Osome are the one who look after all of that, and especially for the e-commerce businesses, because e-commerce works slightly differently than a normal business. We have a very transparent monthly pricing, and we believe that bookkeeping should be done on day-to-day basis, and we charge on monthly rather than charging a big lump sum on a one-off, and this is to help you maintain your cash flow, plus see how the service works for you. You will get one dedicated accountant for unlimited advice and support for no additional cost, and we have a really easy to use chat-based system, which is like WhatsApp, and you can chat with us. We get back to you within 24 hours. It has small things like blue ticks. You can see your accountant has read your message and then see how quick they're getting back to you. We use a lot of integration with e-commerce, so all of the information is downloaded automatically, and that's why we are able to keep our prices quite low, because it's all automated. We connect to your Amazon, your Shopify, your other e-commerce platform, and simply download all the data from there. Just to give you some comparison, there's a lot of accounting softwares out there that that can help you do this, but what you get with us is a complete package. You get a personal accountant, you get your monthly management report, we calculate your VAT returns and submit those, integration to your e-commerce platforms, payroll, and multi-territory accounting as well. And if you see as a comparison to big accounting softwares, majority of the work is normally done by yourself, where with us, you get all of that included in the pricing. And our pricing starts with as low as £59 a month. Lastly, I would just like to quickly share a small video just to show how easy the platform looks and how easy it is to communicate with us. So you have a very simplistic looking platform where you can simply ask us anything new or show a history of our conversation. The dashboard shows you the quick snapshot of your business and how you're doing, and that comes directly from your bank accounts and your accounting softwares. You get a small tab for accounting, which shows what are the outstanding transactions that you need to help us get the documents. And again, as I said, we are completely paperless. You can literally use your phone to take a picture of your documents and send it to us, and we show it to you in a very neat and small looking transaction where you can see each transaction, and with a click of a button, that transaction can be resolved. You get a small update on your company's house account and all the files that you have shared with us. So we have a small sharing platform as well where we keep all of your documents saved. So you don't have to go in different places. Everything is saved with our software. And lastly, yep, that's basically how simple and easy to use that software is, and that's all you need to get all of your accounting, taxes, and personal tax result. Thank you for your time.
Okay, thank you, Timur. I have goose skin from all this accounting stuff, taking money from my bank account, paying to the tax authority. So, oh man. So let's just hand it over to Nimble here, because these guys, they give out money, they don't take money. So, hey, Carlos, just cheer us a little bit, because
Thanks, Nick.
I don't want anybody to take money from me. Give me some money. So.
Thank you for your introduction. Let me share my screen really quick. All right. Do you guys see the screen? Yeah.
Okay, well, first of all, thank you for being part of this webinar. We're really excited to have you over, and we wanted to discuss how we can help you grow your business faster. My name is Carlos. I'm the head of marketing and business development of Nimble Seller. I've been with the company for 5 months now. We are a Singapore-based fintech company providing inventory funding solutions for Amazon sellers. So today I'm going to brush up on the real importance of capital in your online business, and we're going to tackle factors to consider in choosing your inventory funding. So, 3 out of 5 new online businesses, especially with the pandemic that we're going through and the current situation, they mostly fail. And the reason behind that is bad cash flow management. Inventory is a capital intensive element of your business. If you have to constantly match the supply with the demand, and once you're not able to do this, there will be a massive cash flow mismatch, and that would definitely affect the growth and the speed of your growth in the business. And I just wanted to reiterate that the capital, or having a reliable and stable capital for your business, is very crucial. And a lot of people tend to forget this. So once they take this for granted and forget this part of the business, they fail, and the growth of the company just stops. So having a reliable and stable capital is very vital. Also, another thing, in the past months and also a year already for the pandemic, we've seen a surge for demands of our products online, and therefore an opportunity for us online sellers to grow our businesses online. But a lot of us are being held back because we don't have a reliable and stable capital or funding available for resources to launch a product or widen the roster of the products that we offer. So that's something that definitely affects the growth of our online business. And that's why we're here for. As what Nick said, we basically help you grow your company by providing a unique and new funding approach to your online business. So let me just jump on to it really quick. So of course, we have the traditional loaning and funding solutions that we have. We have the bank loans, we have peer lendings, we have all these things that we're already used to. And what we're trying to offer here is something new and unique, and perhaps a better approach to funding solution. So if you're an Amazon seller, first, what you're looking for is something that is available for everyone, right? Something that is borderless. Not all Amazon US sellers are necessarily based in the US. You can be anywhere. You can be in Europe, you can be in Asia. And what you would want in looking for funding option is something that is available anywhere, something that is available for your location, whatever kind of company you're running, whether you're a private label or a wholesale store or individual, registered or non-registered business. An ideal option for funding your business is something that's available for everyone. Then also another factor to look at is the process of right? So compared to the ones that we have now existing that are like the bank loans, it is quite tasking. The process is really long, and they really check a lot of things. So it's almost hard and demotivating to even apply for it, because a part of you might think, I'm not even going to get it. So what we're looking for here is an option that is, easy to get, easy process, and fast approval. If you need the funding, let's say this week or next week, then you would want something that would get you the funding as soon as possible. So for us, we have 48-hour funding approval. If you need it now, you can send us a message, apply for it. Let's see what we have, and let's see if we're going to get approved. And even for the process of approval for funding options, you would want something that is of no credit checks and no personal guarantees. So we don't really require assessing your credit history or personal purchasing behavior only to determine if your business qualify. So there's no obligatory personal guarantees or whatsoever. And so let's say you already got approved for any funding option that you got. What you would want as an agreement or terms of agreement is something that would not have a profit share or no business ownership. With most equity investors that we have providing funding for us, and on the long run, they will have proprietorship or profit over your business, right? And so ideally, you would want an option or a funding option who would let you grow with your business, something that at the end, you would still have pure ownership and proprietorship of your business and would not lose it in the end. So this is something that we take pride in Nimble. This is what we offer. We really want you to grow. I mean, we would deal with a lot of Amazon sellers and we see how the journey is. And at the end, if you want to grow with your business, this is definitely an option for a funding solution. Another element that you would want to look at is the payment terms. A lot of suppliers right now for your stock would demand for full payment upfront or even an unrealistic percentage of the amount paid upfront, and then everything comes right away after. And so what you would want for a funding option is someone with flexible payment terms, something that you can have a bit of space for breather, so you can have your capital circulating in a better way and not being tied up. So that's something that we also offer. Look for options that don't require you paying full amount or unreasonable percentage. So you can also pay in smaller batches and in your preferred time frame in the future. And of course, lastly, if possible and ideally, find an option for funding that has no interest rate. That is the dream. If you find something that has no interest rate for funding, then that is something that you would highly consider. With us in Nimble, we don't have no interest rate. What we have rather is a fixed fee per unit, and that's something that we would agree on in the beginning and would never change all throughout the course of the funding. So once you have your fixed rate per unit, then that would be it for the entire duration. So yeah, next one will be the case study. I'll just present a sample so you have a better idea of how Nimble Seller works with Amazon sellers. I will not go to the nitty-gritty details of it. I'll just make sure that all of you guys will have a copy of the presentation at the end so you can better assess how Nimble Seller works. But basically for this one, it is an actual client with the real numbers. So what you'll see here is an actual situation of how we help a client once she was onboarded with a Nimble Seller. So basically this client was paying 30% upfront with her supplier for her stocks, right? And then the 70% right away, right when the production completes. And so basically she was tied up. Her capital was committed completely to the circulation of her stocks, and therefore she didn't have that much budget to reallocate on other things like PPC or logistics or marketing. Everything was basically rotating for the stocks to constantly circulate. And then she later on applied for Nimble Seller. She was approved within 48 hours. She was granted 90-day supply of 1,800 units, and then she paid 30% deposit once she signed a deal. So we then on connected with her supplier. So we are having now a relationship with your supplier. We paid their whole stock of approved 1,800 units. We would stock in our 3PL warehouse and then manage it to deliver into FBA every 2 weeks. So basically what you would do is you've done the 30% deposit, and then now you are able to pay small increment batches of the rest of the payments every 2 weeks. So you won't have to gather that money and pay upfront in the beginning. Rather, you would have time and space to pay for it every 2 weeks right before we send your stocks to the FBA. And so this comes in 4 mini batches of payments, and the whole period was 5 months. And with this approach of funding, what happened to this client was, number one, she got extra capital for PPC. Number two, she launched another product, which is very, very big element for growing the company. Number three, she doubled sales for just 6 months. And lastly, she had faster annual profit and would likely even double seller's business valuation. So that's a really good boost in the company once you work with Nimble. So this is just the breakdown of the numbers. Seller's expected annual net profit was $81,510. And it turned out having an annual net profit increase of 112%. So that's a really big jump, and that's a really big boost that us in Nimble Seller would want you guys to have in your online business. So yeah, I guess that's it for Nimble Seller. Again, if you have any questions, we would be open. I have here with me Yev, our CEO, to answer all your questions, and we will be sending a copy of the presentation later to everyone part of the webinar. And if you guys want to reach out, here's the links. If our LinkedIn and Messenger, we reply really fast. We want to have relationship with any potential clients out there. And these are our emails, Yev and Carlos. That's it. Thanks, Nick.
Okay, thanks, Carlos. Thanks for the cheering us up a little bit. So we have a little different approach right now. We have two questions to be answered by Pedro and then by Timur, so we can get some rest in the meantime. So one question for Pedro, it's for Neet. What is the benefit of incorporation in Hong Kong? That's from one attendee. You're muted, Pedro.
Yeah, thanks for the question, Nick. So Hong Kong is a global hub. So kind of from the financial services or even from logistics, it's really well connected. What it also has is a beneficial tax system. And I'll probably let you talk more about the tax infrastructure in Hong Kong, but VAT is typically around 6%. So if you're comparing that to the normal VAT tax, for example, in the UK, that's quite a big difference. And lastly is the potential of the market. The Chinese market is huge for both e-commerce as well as for kind of service providers.
So it's like a gateway for Asia and I guess in general China.
Exactly, yeah.
Oh, okay, I see. Okay, thanks, Peter. So one we have question for Timur. What UK bank accounts are you integrated with? What registered addresses do you offer for incorporation? And what's the difference between bookkeeping and accounting service?
Sure. In terms of the bank accounts, we have Tide, Cash Plus, Revolut, and Starling Bank that we have direct partnership with. And majority of the services, the way it works is that our software integrates with those, every bank account that has an integration allowable. So the partnership is directly with those banks and it's increasing, but our software can integrate your bookkeeping with any bank account which can allow online banking. In terms of the price jump between bookkeeping and accounting, so when we offer you bookkeeping, we offer you the software platform, and that platform gives you again an accountant and a bookkeeper to help you do your day-to-day bookkeeping. But when it comes to submission and doing accounts, corporation tax, CT 600, company's house, all of that entails a lot of expertise and a senior accountant to get involved and help you save tax by making sure you're accounting the right taxes, expenses. So that extra jump is for that expertise. And if you go to the competition, you will always see that the monthly prices accumulated to annual price would always be a lot lower than what you get from an accountant outside. But the jump is because of that additional expertise that you get from a senior accountant getting involved and taking care of everything basically. With bookkeeping, it's just bookkeeping. With accounts, it's literally everything. All you do is focus on your accounts, on your business, and we do the rest of it for you. And the full service address is £145 plus VAT a year. In that you get a virtual address with all the emails, the communications, and for company's house and corporation as well, you can use that. So you pay £145 plus VAT and you get an address in UK. It is a virtual address, but you get all of your communication sorted through that platform. Last thing I will also like to mention is that if you're joining us through this panel, you will also get £100 off on any services for the first month. So that's one of the services that we're offering for anyone joining us from this panel.
Okay, so that's good news. Accountants giving away money, so that's a good thing. Timur.
We have to start somewhere.
I guess that's good. So right now, Timur is giving away some money for the attendees. Now we have some bad news. We have hellotax and again taxes. But obviously, no, we don't take any money from you guys. We just do the reporting. So we have the software. So we're the good guys in a way. Not always, but I guess this time we're the good guys. So we have our senior UK accountant to save to actually share, more insights about Brexit in general, how sellers can continue selling in the UK if they're from the EU and vice versa, because that's a very hot topic and a lot of sellers and e-commerce stopped selling after Brexit because everybody was betting that it would be delayed, it would not happen. So it happened. We have few more updates right now. So thank you for joining to Seth and give us some expertise about that.
Yeah. Thank you, Nick. Thank you for the opportunity to elaborate our services to our clients as well as our panelists. So I would just jump right in. And first of all, I would tell a little bit about VAT and about hellotax. As you know that there are a lot of taxes, as one of our panelists explained that very efficiently in detail. So hellotax focuses on just one tax, which is VAT, and we focus on e-commerce sellers alone. So we have a very targeted niche, and that's why we specialize in what we do. So first of all, I would talk what is VAT and why someone should register for VAT in the EU or the UK. So the reason could be if you are based in the EU, one of the reasons could be if you are selling B2C, that is business to consumer directly, and you cross a distance sales threshold in that for that country. The distance sales threshold is different for different countries. Like for example, for France, that is 35,000 euros a year. So then you must register for VAT in that country. That would not be optional. Another reason would be if you are storing in a country, then you must register for VAT from your first unit of sale. That again, it's not optional, that is compulsory. One thing that we should have here noted down, that is now if an EU seller is selling into the UK, since as Nick just explained that UK is now out of the EU due to Brexit, so that would be an import into the UK from a non-UK country. So that is that could be any country in the EU or any third world country like US, China, Japan, anywhere. So if you are importing into the UK, then you must register for VAT as well in the UK. So I would just first go. So a lot of questions that we receive from sellers and from our clients is when they should register for VAT in the UK, and or how could they continue their business in the UK now since the UK is out of the EU. For you to have actually a smooth flow of your business, an advisable option is that you store your inventory in the UK. So that you also have the option of importing into UK every time, but that would have a lot of documentation, a lot of paperwork, and also that would add a lot of delay to your process as compared to your competitors. So a better option is that you would need to store in the UK, and yeah, sorry. So you would need to store in the UK. If you are storing in the UK, then again, on the same point as I explained earlier, you would need to have a VAT registration in the UK and also an EORI registration in the UK. Now, the good thing is, as one of our panelists explained, if you want to be established in the UK, have a company in the UK, you would have to go through all of those taxes, all of those processes, and be compliant with everything. But you could register for VAT as an overseas trader as well. So you don't have to have an establishment in the UK. But since you don't have an establishment in the UK, then you would need to hire a customs agent for your goods to be imported. Again, we are not experts in customs, but the knowledge that I have about customs, the representation that you would require from your customs agent, that would be an indirect representation. So that you need to sort out with your custom agent first. You would have the same mirror image in the EU as well. If you are a UK-based seller and you are selling from UK into the EU, then in that case, you would have to store your inventory in the EU. You would need to have a VAT registration at least in one country, in any EU country. And also you would need to have an EORI registration in any EU country if you are a UK-based seller and wants to sell in the EU. So again, you have the option of being established in any EU country by establishing a company, or you could just register as an overseas trader. But in that case, you would need to have a customs agent providing you indirect representation, since you are you are coming from a non-EU country. Okay. Another big topic that a lot of sellers and clients are asking about is the changes in the e-commerce VAT since 1st January 2021. And yeah, these changes have been implemented in the UK already. And a similar approach will be implemented in the EU from 1st of July 2021. So what that means, a lot of sellers think that now they don't need to do anything, and Amazon will just file their VAT returns and collect VAT and pay VAT on their behalf, which is incorrect. What will happen is the tax authorities have set a threshold, a set of rules. If you fall into those rules, then the marketplace will be responsible for your for the VAT, not your VAT, but the VAT. But at the same time, if you are, for example, storing in the UK, you still need to import your goods by yourself. You still need to be VAT registered. You still need to have an ERI, and you still need to file your VAT returns. Again, if you are storing in the UK, the accounting or the reporting becomes a little bit more difficult from the compliance perspective. But again, this is what hellotax does with our automated software. We have the best reporting capabilities with the new regulations as well. So with these new regulations, if you are selling through a marketplace, then the marketplace would be collecting and paying the VAT. If it is going B2C from outside of the UK into the UK, and you are not storing there. If you are storing there, then the marketplace would still collect and pay the VAT, but you would be responsible for the filing of your VAT returns and reporting even the sales on which the marketplace has already reported the VAT. Apart from that, B2B would be B2B in the UK would be reported by the seller themselves. So these are a few rules. With that, there was a low value consignment relief of £15 VAT relief. It was before 1st of January 2021, which has been lifted now with these new rules. One other very important thing, these new rules are only applicable to sellers who are non-UK based, so they are not applicable to UK based sellers. And they are only applicable if someone is trading through a marketplace. So a marketplace like Amazon, Shopify, eBay, etc. But if they are trading through their own website, then they are not eligible for these new rules. And in that case, the seller himself is responsible for reporting and collection of VAT. This was a brief overview of what we are doing and what the new regulations are. hellotax in this aspect, as I mentioned earlier, we have the best automated softwares which directly integrates with your marketplaces, and we collect the first-hand information directly from the marketplaces. And we also look after the reporting of VAT returns, any communication with the tax authorities, tax audits, etc. So if you need any further guidance on these subjects, this is a very competent team of our Claudia, Samir, Furqan. They are available to discuss these issues with you, have consultation calls with you. So this is our website information that you could get in touch with them.
Okay.
So
thank you to say. Yeah. Don't go away because we have questions for you. You're not done. Stay here. so here is the first one. This from Ian Shackleton. We connected with him on LinkedIn. So thank you, Ian, for joining. This is the question for him. If you're storing in the EU, which country is the best to locate and minimize VAT? I assume he's asking where to store the goods in the EU.
Okay, so if you are storing in the EU, the VAT, and you are asking from the VAT perspective, so the VAT rates would be anywhere from 16% to 20%. But the best place would also not just depend on the VAT, but also depend on the trader's preference. Like, for example, the biggest market is Germany, France. So people tend to move. Before, most of the people, the hottest market was the UK. Now it's still one of the biggest markets, but now most of the people are moving towards Germany. So the VAT rate, there's a little bit difference in the VAT rate in different countries, but you cannot say that this one country could go to such a level which would make a difference for a trader from the VAT perspective. So this would be a preference of the trader depending on his best marketplace. Another thing that I would want to clarify here, a lot of businesses does not understand this very clearly. VAT is not a tax on business. All the taxes that the other panelists explained, those were taxes on the business. VAT is not a tax on the business, it's a tax on the consumer. So the business just acts as an agent. So it collects the VAT from the consumer and passes on to the tax authority.
Okay, so to say, just to summarize, Germany is probably the next step. If you're from the UK and you would like to start in Germany, actually, this is what we're seeing from other partners and clients. So, and just to summarize, they're also easy to register. The procedure is clean, quick, so there is nothing. You don't need to actually translate the documents, which is very important for German, even though most of us don't speak German, but that's a relief. So I have one question. Actually, you covered that for Maximilian, but just I have heard that the threshold regime will change in July. Is that true? This is the one-stop shop that you explained. If so, what would be the changes? So I guess, you need to go over, what would happen in Europe in July, since from July 1st.
Currently what is happening that every country has a distance sales threshold. So if you are, I would just give a brief. So if you are sending goods from one EU country directly to consumer into another EU country, so you have a threshold. After that threshold, you would need to register in that country and then pay the VAT in that particular country of destination rather than country of dispatch. From 1st of July, yes, that is correct. It will be changing, and a one-stop shop will be introduced. This one-stop shop was in place before as well, but not for the distance sales. Like example in the UK, it was in for the digital services called MOS. So what will happen in the one-stop shop is that you would have the VAT registration in any EU country that you would want, and you would only have to pay and file your VAT return in that particular country. For example, if someone based in France is doing B2C transactions only to other EU countries, no matter what the volume, he would only be filing VAT returns in France for all of the countries, and then on an EU level they will be distributed from one country to another. But on a trader level, the compliance would be much easier. But again, you need to keep that in mind that this will only be for B2C distance sales. It will not be affected for traders who are storing their goods in other EU countries.
Okay, thank you, Tosef. So just to summarize something, one thing that will not change in July is if you store goods in a certain market, you still need to register. So that will stay. So
yes, that rule will stay in place. The new rules are only for the B2C distance sales.
And also for non-EU companies, right? No, for the EU companies, the marketplace would not be collecting the VAT. From the one-stop shop, right?
Well, the new regulations regarding the marketplaces in the one-stop shop will be mirrored to as that of the UK. For the UK, the point that matter is if the trader is a UK based or non-UK based, and in the EU that will be if a trader is an EU based or non-EU based.
Okay.
Yeah.
Okay, let me see if we have more questions. So I guess we don't have any more questions. Last question, guys, and we have to go. Too much tax stuff, too much taking money from pockets. No, I guess you need to relax and just summarize all the data that we just have here. Now, just to let you know about all the attendees. Now we will send you an email eventually with some, with just some summary for what we discussed. You'll be able to actually watch the recording. So if you have any more questions after that, feel free to outreach to any of the companies. And if you have more questions, we'll answer that eventually. So we have more panels soon. So follow our channels. We're very active, as some of you know. So we'll have few panels. Actually, we have one more question. Actually, it's not a question, but it's thanks very much. So thank you, Susan, as well, for joining the webinar, and thanks to everybody, Pedro, Carlos, Timur, Tusef, and EF. Even EF didn't answer any questions. Thanks for joining as well. I'm sure you have nice weather in Singapore. Spring is coming in Europe, so that's all positive stuff. So, thank you again for joining, and we'll see each other soon. So,
Cheers. Thanks very much
you.
for
Thanks,
hosting
Nick.
us.
You're welcome.
Bye.
You're welcome, guys. Bye
Thanks,
bye.
everyone.
Thank you, everyone.
Thank you.
Thanks.
Thank you. Bye bye.